Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Friday, the TGI Friday, the 13th. Friday the 13th. Ooh. So it's TGI Friday, the 13th of May. It's my youngest son's birthday today. Happy birthday, James. Yes, it's the Bull versus Bear webinar with Steve Miley and the call for trade day. Welcome, everyone. So going to go for our usual, normal, regular run through in here today. Calendar, what we've got coming up. We'll take a look and what we've had, and then we'll also take a look at some articles from the major news wires. What are those macroeconomic fundamental events that are impacting markets right here, right now? And then we'll take a look at some charts and see where some potential maybe opportunities lie going into today. Okay, data-wise, it's fairly light to finish round the week off in here. We do get Michigan consumer sentiment. That's at 10 o'clock Eastern time today, 9 o'clock Central. And this afternoon in UK time, 3 o'clock, 4 o'clock if you're in Europe. And then we do get a couple of, this could be quite interesting though, later in the day, actually coming at 11 a.m. and 12 a.m. Eastern. We have Kashkari and Mester both speaking today. So that's going to be interesting in the wake of obviously the more recent, the beginning of the month rate hike, and then also the CPI data that we saw this week. And we'll talk a little bit about that data and reaction to that just shortly. Let's move to 5 things you need to start your day from Bloomberg. In here, summing up. So Elon Musk purchase of Twitter is temporarily on hold. Article in here about that. Elon Musk says Twitter deal put on hold. Shares down 17% in pre-market. His tweet reads, Twitter deal temporarily on hold pending details supporting calculation that spam/fake accounts do indeed represent less than 5% of users. So, the fact that that's on hold, not great. And it's putting, obviously, could be putting tech down, but it hasn't really today. It hasn't had a really significant shares are obviously down. Tesla shares up, but Tesla shares could just be up anyway. Because of the fact that the whole market is up today and the tech sector leading the way back higher this morning. What else do we have? This is probably the most important thing in here. So the Federal Reserve will proceed with rate increase of 50 basis points at each of its next 2 meetings. Jerome Powell reiterated on Thursday. The prospect of recession will come down to factors outside the Fed's control, he said. Meanwhile, the Senate confirms him for another 4-year term. So I think that was important yesterday that Powell reiterated that. After I think the market was probably getting spooked that we could be moving to more aggressive rate hikes. But he also said, right, he also said that, if they needed to go harder, if they needed to go with bigger rate hikes, they would. And I think the market likes that as well. I think the market, the stock in the stock market in here likes the fact that, one, we're only going to be getting 50, so the Fed's not getting too aggressively hawkish, but then equally they're willing to pull bigger rate hikes out of the bag if they need to, because that might be necessary if inflation persists to run very hot, as we saw on Wednesday, which was above consensus expectations. So I think the market liked that yesterday, and we certainly seem to see markets react positively to that statement late in the session yesterday, and stocks pointing higher this morning. So we'll come back to that. So that's the Terra USB stable coin in here. Has moderated with the losses previously seen. Bitcoin has sold off. A lot of crypto has sold off. But some of these have now rebounded in here. So some of the negative panic that we've seen maybe infiltrating general markets in here that's come across from the cryptocurrency world has abated slightly overnight in here, and stocks are up. European indices trading at the best level seen for the week. Travel tech and banking names helping out in here. Bonds in here have actually moved back lower again slightly this morning across European US yield curves in here. And we've spoken about the data, the University of Michigan sentiment, Kashkari speaking and Mester speaking later today. So covered already that already. So and then on the headlines in here, it's just about where We're up in futures, stocks up, US futures pointing up, European market says a rate hike worries ease. So again, pointing to the fact that Jerome Powell in here pushing back against speculation of more aggressive interest rates in here. And again, look, risk sentiment was boosted by a rebound in cryptocurrencies in here. So those things in here certainly positive for the market. European stocks rally as early pandemic valuations tempt buyers. So just basically saying that there's value in there, and less concerns about more aggressive interest rate hikes. Again in here, Powell in here. So this from yesterday, Powell says Fed will fix inflation, calls price stability the bedrock of the economy. So again in here, all of this pointing to more of a risk-on sentiment in here. Again, look, Jerome Powell repeated in here, 50% shows easing worries at a bigger 75 basis point rate hike. And this is an interesting article though. So Wall Street fear gauge offers no silver lining as bear market loose. What is it talking about the fear gauge? Well, it's called looking at the VIX index, the volatility index, the CBOE volatility index, which usually goes significantly higher. Volatility goes higher. The CBOE volatility index, the VIX, goes higher and usually goes above mid-30s when we're coming towards that market bottoms. Now, and its average level at market bottoms has been 37. Well, it's only hit around 32. Now, clearly, markets are very, 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 very volatile. You guys are out there trading them every day. We know that. Yeah, we're watching them every day. We're trading them every day. We know that. And we can see that, that they were seeing some not only moves within the day, but, day to day, up 3%, down 4% on the NASDAQ, up 2.5%, down 2%, down 3%, down 4%, and within the day, big swings within the day, these swings day to day as well. But the VIX index has not hit kind of extremes we would normally expect a market bottom. It doesn't mean that it has to go to those extremes. There have been bottoms where it doesn't go to those extremes. But if it had been out to those extremes, we might be happier saying that potentially the market might have hit a market bottom. But for me now, I'm kind of less sure. At the moment, my feelings are we could easily have another leg down in here, even though the market's trying to put in some kind of basing pattern in here at the moment. Morning bid TGIF. So thank God it's Friday. Is it over yet? Question mark. And then pointing out again, there's Friday the 13th. So even though we're up today, don't count your chickens before they hatch. In that we could easily see another big tumble, even though we've had a strong rebound. We've already spoken about Musk in here, and then just a quick look at the stock indices. So Europe in here notably up, 1.5 to 2% up across the European exchanges this morning, as we saw US futures rally late in the session yesterday. Not only rallied late in the session, we came off the lows. It was about, I don't know, I was watching, we were only about 30 minutes to the close in here last night into the US close, and stocks are pretty much on their stock indices are on their lows. The S&P and NASDAQ were sitting right on the daily lows. We recouped a lot of that going into the close, and then we saw an even better recovery overnight when we got those comments from Powell. And so, European bourses, obviously European exchanges in here picking up, didn't pick all of that up. The markets were kind of looking quite negative when European markets closed yesterday, and so they're catching a lot more of that bid that we saw late in the US session and then beyond. So we were obviously down and ended up, even though we rebounded into the close, we were down yesterday. But then look, decent rebounds in here this morning. So NASDAQ's up over 1.5. The Dow 0.75, the S&P about a percentage up in here on the futures overnight. And just a quick nod to the CME tool in here. So this was just edging up slightly actually, even though Powell reiterated in here, this was has been sitting around 90% and above, just above 90% now, 87%. So this is saying 50 basis point at the next meeting. And this is saying for 75. And if we go for 2 meetings out, this is now saying for 2 50s, 2 times 50. And this is saying, well, at least 175 in here. So, so the market edging slightly towards potentially another rate hike or a more aggressive rate hike potentially. Let's take a look at the charts. So S&P 500, first of all, there's the turnaround that we saw late in the session. We'll zoom in and look at that in a second, and then higher up today. Now this pattern in here, it's a classic reversal pattern. It's a bull hammer, you would argue, bull hammer, and already been confirmed by an overnight session by taking out the high from the bull hammer. So yeah, a really positive signal there. And if we zoom in, I'm going to right the way into a 15-minute chart, and you can see. So the rally in here came very late in the session, right? So this comes literally sitting down here with like 35, 45, 40 minutes to go in here. And the rally comes boom, 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 right into the close, right? So it's a very strong rally into close. The last like 30 to 45 minutes, we get the strong rally, and it turns it from being a, very, very negative day down here to pretty much, a fairly positive day. And we had that positive candle. And then the market continues higher overnight and reacting to power as well, continues to push higher right the way through overnight, and then stabilizes through the European session, and then prodding higher and sitting right on the highs in here. So it looks like a potential base, but we all know, right? Let's wait till the US equity market opens in here. I don't think we're going to get too much ahead of that. If we can push to another new high, I'd be happy to go in with the break of the high. You've got an important swing high over here as well from last week, actually beginning of this week, excuse me. So this is wrong. So it's a 15-minute chart. So early this week, that high there is 39.85.5. Through there will be important, but I think just up through the highs in here, and I think through this overnight low, you see the market's stabilized here overnight, and then obviously we're down to here. So back down through there, 39.51. It all looks quite vulnerable again. Up through the current high in here, 39.76 3/4. It looks bullish. So I'm probably just looking for a breakout of this kind of this morning range in here to give me the next signal. I mean, I wouldn't be getting too bearish. If it breaks here, be careful because it could easily dip through here and then go again to the upside. But but certainly I think edging towards playing it for a change from the long side. It's a similar chart here with the Nasdaq. Again, not quite as positive a candlestick here, not quite as bullish a hammer, but then taking out yesterday's highs already in here. And again, as we showed before, the rally comes from very late in the session, doesn't really get going till about 45 minutes to the end of the session, decent rebound. Then it's less convincing in here from the Nasdaq, but then more convincing really overnight, and then you get a strong rally continuing throughout overnight. And again, looking for a break maybe above the current rebound high, and it's already above the equivalent high over here. See this one over here from this is from Wednesday. It's already above that high there. It's already broken above that high. So just above the overnight highs in here, 12 like 180 would be bullish. Back down through these kind of overnight lows that here or here. So you've got 12.06875 and down here 12.046.5. Then it starts to look wobbly again. So playing it from those parameters. Let's take a look at the commodity markets. Kicking off on gold on the daily. So gold continues its slide lower. The dollar stays strong in here. Here's the dollar. Boom. Another big move higher yesterday. This is mostly from the euro breaking down. The dollar actually went down versus the yen yesterday. So the yen was the strong currency in the last 24, 36 hours. Yen rallying against everything, but the dollar made a big up move. Its biggest up moves versus the euro since March 2020, since the pandemic. So we had the big breakdown in risk through the pandemic in March 2020, and the biggest one-day up move for the dollar versus the euro. So it's EUR USD down. A lot of talk now about euro dollar hitting parity. And so we've seen this strong rally in the dollar, and obviously the dollar up, gold down is often the way. So gold down and again gold down again, and looking very, very negative in here going into today. I can't advise anything but selling this. We've had a rebound in here, and it's already given back a lot of that rebound. So here on the 15-minute chart, so just for me, short in here. And it's not like, if I go back to the daily chart, it's not like it's a big down day. This could easily drop down into here towards these lows over here. Could easily be down into like 1790. So it's not like we've lost a lot already on gold. So watching out for that. Let's take a look at oil in here. Again, in this bigger, duller, broader range. Up 2 days ago, Wednesday, strong and push back up into the range. Dip and a rebound yesterday, pushing higher again today. Can't really play this from any other way, but up in here. At the moment, just made a new high in the last hour. It's dipping back lower, looking to probably buy this swing. If it does break down through the overnight low, though, just here, which is at 106.29, then certainly that's a risk for a more negative. It has slowed in its ascent here, but nevertheless, from the more aggressive move we saw here, this is like Wednesday, and it's slowed in this ascent Thursday through Friday, but nevertheless, I have to play it from the long side. If it does, probably looking at a stop and reverse below that low there, though. The low being 106.73. So down through there, it looks a lot more negative. Sorry, 106.29, excuse me. Down through there, it looks a lot more negative. But, trying to buy somewhere between the high and down into here, somewhere in the low 107s. You can buy, get some longs in there, looking for the next swing higher with a stop and reverse below 106.29. That's how I would play that one myself. Okay. I'm going to wrap it up there. I'm going to wish you all not only a great trading day, TGI Friday and all that. Have a great weekend as well. I'll be back with you with another Bull versus Bear webinar on Monday. Till then, take care. Stay safe.